impact that American President Donald Trump's economic policies and his new trade tariffs could have on India and the rest of the world. We're joined at the India Today Business Today studios at the World Economic Forum by one of the world's leading economists, the first Deputy Managing Director of the International Monetary Fund, Dr. Gita Gopinath. Thank you very much, and it's a pleasure to have you. I want to start by asking you about what you're making of American President Donald Trump's determination to impose new trade tariffs. From the IMF's lens and from your own personal point of view, how do you see that pan out in actuality, belligerence versus reality?
Rahul, always a pleasure to join you. President Trump said he would hit the ground running, and he has done that, and he's announced a lot of measures. He's been more concrete on immigration and on energy, on tariffs, on trade policy more generally. He has pointed to intent, but we have yet to see what exactly he will do. The details matter, and the reason I'm saying that is because if you look at the tariffs that were done in 2018-19, the details didn't matter in terms of what products you put your tariffs on. That's going to determine how much of an inflationary effect it will have. How countries retaliate, that was absolutely critical for what the consequences were going to be. But, in general, what we have seen based on historical evidence is that if we end up in a place where there are lots of tit-for-tat tariffs that happen, then that's a net negative for the world as a whole.
So how much of an impact do you think this could have on global growth? It will, of course, determine, as you say, it will be determined by what tariffs he imposes, yes, what countermeasures the other countries employ. But how do you see this impact global growth? Because the latest IMF forecast seems to suggest global growth slowing down on its own even before these tariffs have come into place.
So in addition to knowing what the details are on the tariffs, there are a lot of other policies that are being announced by the U.S. government. So, for example, which they plan to do, which is to make the tax cuts permanent, to have more financial deregulation. There is a lot of positive sentiment. Foreign direct investment into the U.S. is very strong at this point. So all of that can have an offsetting effect. So in fact, our near-term assessment is that there are more upside risks to the U.S. economy. Now, what that usually means is that if there's more growth in the U.S. economy, it does have spillovers to the rest of the world, and that can be positive too. While many of the other policies on the trade front and so on will be more of a downside risk for the rest of the world. So what I'm trying to say is that it's not just about trade and tariff policy, but there's a lot that's happening on taxes, a lot that's happening on immigration, on energy, and so on. So we have to look at the sum total to be able to say what will happen to global growth.
President Trump has called India tariff king and threatened tariffs against India as well. How do you see that impact the India-America bilateral trade and India's growth and India's desire to build its own economy at this time?
This is going to be an environment where, the U.S. is going to have bilateral negotiations with all their trading partners to address what they feel are unfair trade practices, that the fact that their products get imposed higher tariffs than what the U.S. imposes on products coming out of other countries. And so, there is a valid point of whether this is a level playing field or not, and therefore I think countries will have to negotiate this. As you know, and I've said this before to you too, our view at the IMF is that India could afford to cut back on some of its tariffs just for its own sake, because this is an important opportunity for India to plug itself into global supply chains. Everybody is looking to diversify, and I hear from almost everyone that India is a very attractive destination. But to be able to go in, you will need somewhat lower tariffs in India too. So that will help India directly. Again, but like I said, every country is going to be negotiating this.
So there are two trends playing out simultaneously. One, India trying to attract some of the China Plus One investment into the Make in India story. The other, Donald Trump determined to get companies to invest and manufacture in the United States. To what extent could that mar India's chances? You're saying reduce tariffs, plug into global supply chains, but you've also got America determined to pull manufacturing into mainland United States.
But the US is actually quite successful now in being able to attract investment into the US. So if you look at foreign direct investment around the world, the US is an incredibly attractive destination. It's taking a bigger share of foreign direct investment flows. I think the best thing for India to do to offset some of that is actually to focus on the domestic reforms. In terms of what prevents people from going into India, it is about still the ease of doing business, the infrastructure, the ability to buy land or sell land, contract enforcement. those are the kinds of aspects that are more of a constraining factor. So the more India can do in terms of structural reforms at home, and it's done a lot. I mean, not to deny that. It's done quite a bit, especially in terms of public infrastructure. It's done a lot, and to keep that momentum going, that will be what will change the story for India.
You know, you're talking about the need for the Indian government to usher in a new range of reforms. We've got a big budget coming up, and this is one year where there are just 2 elections in the states, and they're very far spread out. So it's an actual opportunity to push some reform through. On the economic policy, what are the key reforms you and the IMF are looking out for from India?
So I think firstly, it is important to continue on the path of public infrastructure investment. And implementation needs to be timely. This is not just at the central government level, but I'm talking at the state government level. There is still a big need for that, and so pushing more on that front is going to be important. It's also important to keep India's macro stability, and it's done very well in terms of inflation, and what the RBI has done in terms of managing inflation has done a really great job. On the fiscal front, of course, India's debt levels are high. It's not an imminent concern, but that's something in terms of the budget to determine what you can do, because you need to be able to raise some revenues too while you undertake the spending. Making sure that's done in a growth-friendly manner is going to be important.
India has seen a slowdown in economic growth in the second quarter of this financial year, with growth slowing to 5.2%. Overall, annual growth forecasts are down as well. Now there's a big debate raging over whether this is a temporary slowdown caused by the elections, by the pullback in capex, by the government, or is this more cyclical? How do you come out on this debate?
So the 5.2% we see as a temporary thing. That reflects the fact that there have been some delays in implementing some of the public infrastructure projects, but we see that picking up, and we do continue to see strength in rural consumption. I remember last time we talked about that. For the fiscal year as a whole, our growth number is 6.5%. So we do expect to see a recovery. But for us, potential growth is also at 6.5%. So again, this comes back to, if you want to be able to raise potential growth by a lot more, you're going to have to do the structural reforms.
So you've reduced what you think is India's potential growth in the medium term to about the mid 6%, right?
6.5%. Yeah, but I don't think we've been that far off from 6.5% in general.
Talking about cryptocurrency, I remember speaking with you last time, and you generally weren't very bullish on cryptocurrency. Now you've got a president of the United States who's highly bullish himself. Does that change? Apart from having coins in his own name and his wife's name, which is a different matter altogether, but does that change your perspective on how you're viewing cryptocurrencies and the stability and the future of this asset?
The way that we've always viewed it is that crypto has both risks and opportunities. There is a technology that's underlying it in terms of distributed ledger technology that many companies are actually using for other purposes, like for their payment platforms, for having more security in their contracts. That is all extremely welcome, and that's why innovation is good. There are many faces of innovation, and this is all fine. But at the same time, there are risks, and therefore we do think countries around the world need a solid crypto policy framework that protects consumers, that prevents your financial stability risks from building up. You can have both, and you have to hit the sweet spot there.
Speaking of regulation, there's a need for regulation on artificial intelligence as well. Do you see anything at all which leads the world towards having some kind of a common governance architecture, or will it just be the case of development and use cases running far faster than any governance around?
First of all, for AI, it's much more than just regulation, right? There are issues of what will governments do if in case AI ends up with a lot of people losing their jobs. How do you get also innovation going? What kinds of policies will encourage innovation? So it's not just about the regulation aspect, but there are multiple aspects.
So let's break it down one by one.
Yeah.
You spoke about the potential impact of artificial intelligence on jobs. I was just in a conversation at the World Economic Forum on industries in the intelligent age, and the argument being made by chief executives is that the impact on jobs isn't as severe as was being made out initially. How do you view this? How bad or how much of an impact will artificial intelligence have on jobs, particularly in India?
I think we haven't seen the first of it at this point. It's still early days, so we're still in the realm of the hypothetical and the theoretical at this point, based on some estimates that one can do.
What are your estimates?
Our estimates is for the world as a whole, 40% of jobs are exposed to AI, but at about half of that, so 20%, will benefit from AI, and 20% could be displaced. wide variation. So advanced economies are at 60% exposure. India is at 26% exposure. So there's a lot of variation over here. We'll see what happens in terms of the labor market. I think a good thing to remember from past history is that when you actually see the impact of automation on the job market is in the first year of a recession. So you don't see it in normal times, you don't see it in good times, everybody's chugging along. And then you have a recession, and then in that first year, that's when 90% of automation-related job losses happen. So I don't think we should be sanguine at this point. We should be careful what may come in the future. What governments can do first is to make sure that they're on the benefiting from AI side. That requires digital public infrastructure, skilling, making sure your population can actually use AI. Otherwise, they will be on the losing end.
So let's spend some time talking about that, because India seems to have taken on the mantle of being the use case capital of the world. Instead of focusing on building large language models of its own, it is attempting to do that, but really trying to implement artificial intelligence and its capabilities. Do you think that's the right approach? How would you, because you're also of Indian origin, how would you think a country and an economy like India should really be approaching artificial
I
intelligence?
think that's a good place for India to be. It does not necessarily have to be in the foundational models producing side. There are a ton that can be done in terms of application, and especially for a country like India, even in education, in the healthcare space, these applications can be very helpful, and they have to be tailored to country circumstances, which is why the industry has an advantage in doing that. But I mean, the bottom line is, as long as you have the right environment for companies to innovate, venture capital is going to be very important. The right level of skilled labor is going to be very important. Education is going to be very important. Creating that ecosystem is critical.
How strong a pushback do you see from China on some of the trade measures that the United States may implement, and how should India be navigating its dealing with the Chinese economy just at this moment? Because after a lot of deadlock along the line of actual control, there's ultimately now a bit of a thaw, and the question is, at what speed do you accelerate that?
Yeah. I mean, countries, for their own selfish interests, benefit from cooperating. And therefore, I expect all countries are going to sit across the table and negotiate what they think is good for their countries. And by the way, cooperation, as I said, has been good for the world and for everybody individually. So we'll see how this plays out. I mean, the last time China did retaliate when the US imposed tariffs. We'll see what happens. It's too early to speculate.
But do you see the fragmentation of the global economy, the division into two camps, that trend accentuate? Or do you think they're more likely to find ways of being able to navigate these divisions?
We are already seeing signs of what we call geoeconomic fragmentation, which is when you look at trade is much more stronger between countries that are more geopolitically aligned. Geopolitical alliance is becoming a bigger factor in explaining who trades with whom, who invests in which country. So we are already seeing the seeds of that. And I expect that's going to continue. Now, unlike 50 years ago when so-called non-aligned countries were a very small share of world GDP, they're much stronger now. I mean, India, Mexico, all of them are much bigger economies, and they can play a much bigger role in terms of being a bigger part of the global supply chain and seeing how trade gets rerouted.
So do you see a fragmentation in the medium term of the world into two trading blocks?
I don't think I would point to a very stark break in terms of completely fragmented world, but we certainly have drifted away from the strong rules-based multilateral trading system that we've been used to for a couple of decades.
Before I end, I want you to speak to young people who are watching you at this moment and wondering what kind of skills should they be developing to be able to navigate, succeed, and survive in a world dominated by artificial intelligence, where machines are much smarter than men. How should they be preparing for the job market given the realities that face them?
Well, I mean, firstly, I still believe that STEM will be important. I don't think machines are going to completely take over all aspects of STEM. So STEM will remain important, but also just in terms of investing in creativity, in terms of investing in teamwork, in terms of thinking at a much higher level as opposed to in terms of the minutiae. I think all of that, building those skills is going to be important.
There's a big debate raging over immigration. ultimately it seemed that Donald Trump came out on the side of Elon Musk on the issue of H-1B visas. But do you see this argument impacting skilled labor wanting to move to a country like the United States, or not really, that the pull is just too much and it won't impact who comes and who doesn't?
For many countries, including the US, there is certainly a need to revisit immigration policy. It has created a lot of stress in the US, and so it's not unusual to see that they are thinking of how to change the system. We remain of the view that skilled labor is critical for economies in the world, and if you can get the best talent from other parts of the world, you should attract that into your economy.
The American president talks about taking over Greenland. He talks about Canada as being a 51st state, and talking about taking over the Panama Canal. How do you see that potentially play out in the months to come?
Oh, that's not something I can talk to. I think we stay out of of those kinds of issues. We'll see what, if any, economic impact that it could have.
Well, it's been absolutely fantastic having you here, and thank you very much. I hope you have a superb World Economic Forum. Thank you.
You too.
Thank you.
Thank you.
Hello and welcome to Business Today. I'm Siddharth Zarabi, live from the Business Today India Today studio here at Davos, the World Economic Forum of 2025. And we begin our live coverage on Business Today with a very special guest, Kathy Lee, the head of AI, data and the metaverse